So welcome everyone to the Old Banks New Ambitions panel. Today I'm joined by Julia Holsgreve, Paul Fremantle, Carmela Gomez, and Martin Slatty. If I could have everyone please introduce themselves and tell us where you come from and how you relate to open banking. Carmela?
Hello to everyone. It's a pleasure to be here with all of you. I've been working in banking for the last 25 years, and I did everything in banking, from trading to set up an online bank. I dealt with the venture capital side of the bank, and I recently ended in open banking after working with several global projects across the bank related to electronic channels and different payment systems. So I think this is an amazing challenge to go forward.
Thank you, Carmela. Julia?
I am Julia. I work for Keen Innovation, which is a subsidiary of Basel Kantonalbank in Switzerland. We have two banks in the group, so Bank Claire and Basel Kantonalbank. And we're basically their innovation lab. So we work on all kinds of partnership, or we develop our own solutions. And why I'm here at the moment is basically because I'm focused on banking as a service, building up that new business line in the bank, and kind of working on different use cases for invisible banking, banking as a service, and so on.
Thank you, Julia. Paul?
Hi, I'm the Chief Technology Officer and co-founder of a company called WSO2. And I and the company come to open banking actually from the API side of the world rather than from the banking side of the world. So we started doing APIs pretty much 13 years ago when we helped eBay implement the gateway for all their API traffic, and very quickly we're up to billions of transactions a day. And since then we've created hundreds of customers, help them build out their API management strategies. And what we've seen, of course, is that a number of banks have really wanted that technology, not only in open banking, but actually non-compliant APIs are very, very important as well in the industry. And actually finance as a whole is our biggest sector. So thank you.
Yeah, welcome, Paul. Great stuff. Martin?
Hello, I'm Martin Slarček, coming from Komerční banka, which is the member of Société Générale Group. I hope familiar to you. Actually, Komerční banka is full-service bank operating in Czech Republic, covering all client segments, And what I'm proud of, this is on one side the traditional bank, but on the other side, not the old-fashioned one, because they realized several years ago, meaning the top management of the bank, to act proactively, meaning the challenge of PSD2 and APIs. And so I joined Komerční banka because before that time, I was all the time acting as on a vendor side as the advisor and consultant. And we have built together open banking from the scratch. And actually, we are perceived as leaders on the Czech market, and not only on that. So this is our situation, and I can confirm that open banking is worth of investment, and we have already numbers which are showing and proving that case. So, hello.
Welcome, Martin. And my name is Carlos Figueredo. I am the CEO of OpenVector. But most importantly, I was the head of data standards for the open banking implementation entity. So pretty much one of the, I guess, co-founders of the open banking initiative in the UK. As part of OpenVector, we are a consultancy firm, an advisory firm that primarily helps governments, financial institutions, and fintechs to be able to onboard and evangelize on the subject of open banking. We've been very much involved not only with the UK Open Banking Initiative, but also across the Americas, primarily in Mexico, where we helped the Mexican government with the fintech law and the first data standards for open banking in the Americas. So I'll be your chair for today, and here goes the first question. So for the first question today, it goes to Carmela. Carmela, various banks have led on the subject of open banking, but what have they done to break from the image of a traditional bank to a bank that is open to collaborative innovation?
It's a good question. I mean, open banking seeks to provide customers with a more efficient and personalized services. And it also offers the opportunity to innovate, streamlining processes, creating new business models, and opening new markets. To develop an open banking strategy means focusing on the end customer experience. And what has changed in the user behaviors? In the past, users visited the bank, while now they expect to be the bank that approaches the customers, offering everything they need, whenever they need it, wherever they need it. And this implies some changes, because to reach new customers, you need to offer financial solutions on other platforms and not always related to bank environments. So with open bankings, both individual and companies will have better options to decide where to find all they need. A good example of this is how BBVA has addressed their customer app, where we solve a real need, creating an excellent customer experience by offering data from customer accounts or cards coming from different entities in a single application. So the customer can access one single entry point to deal with all their information. And obviously this has transformed not only the way in which customers see banks, but also the bank internal structure. At BBVA, for example, we see open banking as a strategic opportunity to provide better digital experience to people, but also help both companies and our own organization with the digital transformation process that is needed for this. In fact, I mean, our mantra is to get closer to the innovation ecosystem and explore new business models. And open banking offers us a path for growth, either by improving our distribution network, but it also allows to reach new clients and businesses in their own ecosystem. It also provides us the possibility to add third-party services to our platform, which makes our services more appealing, or maybe increase our processes efficiency. No? So what we do to achieve this, we use strategic partnerships, as we have successfully done, for example, with Uber in Mexico, which has turned BBVA into the first bank to offer its product on a third-party platform in Mexico. Here, I mean, the solution is mainly BBVA APIs provide drivers access to real-time payment functions and debit card operations from the Uber app directly. This collaboration with other companies and sectors allows weaving networks with partners to create new experiences and also to participate in ecosystems that can add a high value to both the bank and its customers. No? So I think this is the main change around the partnerships and how we transform the way to offer those services to our customers.
Well, thank you very much, Carmela. Julia, would you like to comment?
Yeah, there was a lot. I think I completely agree. I think this the mindset shift and this kind of ecosystem approach of kind of doing more together instead of just focusing on your own products. I think that's the main change that's currently happening. I mean, I live in Switzerland where we don't have PSD2 and it's all not that regulated yet, but there's still kind of the need to think more in terms of ecosystems and yeah, develop new models of working together. And I think that's really interesting to watch right now.
Thank you for that. Paul?
Yeah, there's definitely some really interesting shifts going on. And one of the things I've really noticed is that a lot of developing countries have really started to not be required, have to worry about compliance, but they're actually becoming very proactive about creating open banking standards and doing that. And it's because they've been a hotbed of innovation. I mean, a few years ago built a mobile wallet for a large telco provider in Kenya. And now we see Kenyan banks really keen to implement open banking and build new apps. And as Carmela says, really participate in an ecosystem. And I think that's a key word here. Very,
very true. Martin, would you like to comment on that question?
Actually, I saw that case with Uber and the BBVA recently. And I have to say this is typical example how things could work. And not only combining fintech, banking together, but to do as well as some responsible steps, because this is how you can cover unbanked population. So you can do as well as not only reasonable things, but as well as good things together and in some innovative way. And this is what gives me sense.
Okay, so thank you, Martin, for that. For the next question then, Julia, based on your background and that of your firm, which are the heart of fintech innovation, how are you finding it to work with banks in today's fast-moving world like open banking?
I think, yeah, so there are several layers. I mean, firstly, we're not in Europe or in the PSD2 world, so Switzerland is a bit kind of more hesitant at the moment to work on it on a regulatory side. So it's more driven by the banks and other players themselves. There's about 3 different initiatives at the moment that really try to push standards and to rally groups around them to drive the topic. But at the moment, it's still mostly driven by more one-to-one partnerships. So APIs between a bank and a digital platform, or a bank and a fintech. And those cases are becoming more common. And then that's kind of, that's the risk that at the moment that lots of things happen without the standards. And then, it will be, maybe there will be some change required when that changes in the future. But I think the mindset of the banks is really interesting at the moment to realize that, for instance, with banking as a service, that they can develop a whole new business model where possibly they're not even visible, where they're in the background of empowering something, which is so against what has always been the driving force. The customer interface always was the most important thing for banks. And realizing that customer interface might be actually better served by someone else that has a different relationship to the client, that maybe has a better UX or has a already existing relationship through another industry, from e-commerce or other industries. That's something that's slowly kind of changing, and it's really interesting to watch at the moment. So, yeah.
Thank you, Julia, for that. Carmela, do you have an opinion?
In fact, I think you touched a very important point, which is the standards issue. Creating those standards will definitely mean a change in the way that companies, partners, banks, every single player across the ecosystem in open banking will work. And that's, I think, one of the key points that will make the market explode, and will definitely change the way we do things. Now, we have plenty of examples across history, regardless if you take autos, regardless if you take printers, if you take video, whatever. The standards have always helped the industry to grow really fast once the standard has been set up. And I think that in open banking, that's critical. In fact, there is a European Banking Association consultation going on now, or starting, that will probably take us towards new standards. And the sooner the better we set that up, the sooner we'll see the market growing. Coming
from the background of standards, I cannot agree more, and really hope that we continue in that path. But also not only of just of creating standards, but ensuring that we are all using the same standard. So I think that that's an important point. Paul?
So certainly I've seen some very different behaviors from banks over the past couple of years, driven by open banking. And I think it's really interesting. I've seen, firstly, some very large banks that were traditionally, let's say, a little slow to act, really kind of start to ramp up their innovation and their agility. And some of them have been doing it by setting up kind of subsidiaries that are much freer to move. Some of them are trying to reorganize their internal structures, and some of them are doing it in different geographies, for example, by being very agile in non-traditional markets. And also I've seen some, small banks just really ramp up their speed of operation just to meet the compliance deadline. I mean, we worked with a small UK bank called Synergy, and they were late to the table. They were not going to be ready for the compliance deadline. About 6 months before the deadline, they came to us, and we did the whole thing in 3 months and got in production, and they actually beat the deadline. So that's not normal behavior for a bank. So that was fun to do. It was an interesting project.
Thank you for that. Martin, do you have any comment on that?
Actually, I can just add that standards are really crucial. Actually, for example, we have a movement on the Czech market, which is sector-led by the Czech Banking Association in creation the Czech National Bank Identity Scheme, and creation of the common standard which will allow all banks, all service providers, so meaning all market players, to connect together easily in a standard way, is making things streamlined and much more effective. And again, it is worth of money to do that and to prepare it in advance, because it will ease and make fasten all the things to everybody. So I can just underline it.
Sorry, just to add, I think that's really interesting. That's what I've kind of seen when I've been to conferences in Europe recently. It's like lots of banks that have now had immense costs of implementing the standards and the regulation, and are kind of now looking for the business cases and saying, like, what do we actually now do with it? And I think that's a really interesting time, because everyone is watching each other and seeing, like, what are others doing? How can I now kind of make use of this? So it's kind of at the moment in Switzerland, I would say it's the other way around. I'm not saying that's better, but it's interesting to kind of compare the two situations.
Yeah, definitely a conversation about commercializing open banking as a whole is a challenge, right? So not only the bank seeing this as hopefully not seeing this as a regulatory checkbox, which is not. Open banking is definitely a movement as we move into open finance and open data, but also that the banks realize that this is a huge commercial opportunity. It's just a question of finding it. So Paul, over to you now for the next question. As we look at the changes that banks are going through at the moment to participate in the various initiatives like open banking, in your opinion, will they eventually go back to traditional bad behaviors?
So it's a really good question, Carlos, and I think I think what you call bad behaviors is really a factor of having an unfair position in a market. So, and I think open banking really changes that landscape considerably. It makes it much, much harder for any large player just to use their weight to push others around. And so I don't really see that shift. And I see sort of a systemic, consistent shift in the thinking of the traditional banks that I've talked to about how they want to change their ways to become much more customer focused, and also, as Carmela was saying, to look for new opportunities that may not be direct to customer, that are about creating ecosystems and participating in ecosystems. And so, maybe we'll get new bullies who take the market. And I'm afraid to say, I think in some areas where open banking's not been mandated and is maybe sort of happening through how can I put it, through commercial rather than compliance models, there may be some companies that sort of try and take the open banking model and own it in a way that hasn't really happened in Europe. And I think they could become the new big monopolies of the future. But at the moment, I see a very strong future, especially in Europe, but in lots of countries. I've done a lot of work in Africa, in the Middle East, in the Far East, and I see some real innovation happening in those spaces. So I think the future is pretty bright.
Paul, thank you. And I think what you're saying is spot on. And I think by bad behavior, I was trying to say more of the fact of the lack of collaboration, the lack of being able to break down some of those procurement walls, et cetera. And you're absolutely right. I also have done quite a bit and traveled quite a bit in Africa, and have seen incredible participation and collaboration between banks and fintechs of all sizes. And I think that sometimes we look at ourselves as being in the large cities and thinking that this is where it all happens and we should follow this model. And I really think that we should learn from other places, not only in large cities like London. I can see great examples that I've seen in Nigeria and other countries of great collaboration between banks and fintechs that I haven't seen anywhere else. So I think there's lots to learn from that. So
yeah, I just want to add, I mean, so Martin was mentioning he's part of the SocGen, Societe Generale. They have been working throughout Africa to do some really interesting initiatives with open banking and to create mobile apps for traditionally unbanked people. And I think that's a great example of what is an absolutely traditional bank being highly innovative and really positive to be honest, to compete with mobile wallets that are springing up. I mean, the average Kenyan probably has 3 different mobile wallets, and more money is traded through mobile wallets than traditional banking in Kenya today. So, it's a interesting challenge, and I think the world's never going to be quite the same again.
No, that's a good point. And I think I'll go ahead and since you mentioned Martin in this case, Martin, would you like to comment on that?
Yeah, thank you. Actually, as the Kenya is the, if I may say, the world leader in mobile banking or mobile wallets, I think this is something what had happened. But I wanted to mention that there are many examples of applicability of open banking, and one side could be in some developing countries where is unbanked population, when the traditional banking is not either geographically or technologically split it in whole area or whole country. So you can easily put things together, and you can let you serve your services to all who needs it. On the other side, you can as well as touch segments or clients or situations where the banking was not present yet, and where it is more than reasonable and more than needed. So open banking could be perceived as well as the huge extension of your distribution network. Just imagine situation in connected cars, for example. Everybody is commuting in big cities each day, meaning twice a day, once to work and second to your home, and you are alone in your car. And there are plenty of situations when you would like to at least be familiar with what happens on your account, how looks your finances, whether your investments are in a good shape or not, and just combine all these things together, not only with the device, with the environment. Just the example, the connected car, or it could be as well as smart fridge in your kitchen. Just open your imagination and combine all these things together. Let your fridge to order your meal and check the expiration period about the goods in it. So and all these cases could be combined with open banking.
So thank you very much for that, Martin. And I think it makes me very proud, being at the very beginning of what's happened with open banking, to see countries like Kenya being mentioned and just seeing so many other countries that we just don't think about as being real innovators. I think that makes, it should make all of us very proud of where open banking has gotten to. But I wanted to give Carmela a fair shot, because when we said, will banks fall back to bad behavior? Carmela, what's your opinion on that?
well, my answer to that question is really short. It's no way to come back to bad behaviors. I mean, it's like if you ask me the question that once credit cards are spread across the world, is there any opportunity to go back to the past? Which the answer obviously is no. Here, I think it's the same. Once you open the door to open banking, to partnerships, to do things in a different way, there's no way back.
Good, thank you. I remember just a couple of years ago when I first traveling to talk about open banking, a lot of traditional banks literally cut a couple of meetings short and told me that they were just going to end the meeting right now because they would never participate in open banking, and that open banking would eventually just go away. So I'd like to remind them of that conversation and just say that open banking is very much alive, and here we are ready to help, all of us ready to help those banks to advance in what they're doing. I'm going to go ahead and move on just a bit. Martin, this question goes to you. With everything we know now and with open banking, will banks disappear as we know them today if they don't adapt to open banking? So if they don't embrace open banking, will they disappear as we know them? Meaning, will we go back to the Bill Gates term of, we need banking, we don't need banks?
Thank you, Carlos. Actually, my personal opinion is not. This was really a straight answer, but let's go deeper. Just imagine there could be some 4 basic cases how banks can behave in actual world where open banking and APIs and fintechs pops up and changes maybe the market as it was. So the first case is just to be aligned with all that regulation requirements, at least here in Europe, where at least PSD2 is required by banks, from banks by regulators. So they could be compliant. They can provide their PSD2 APIs, and that's it. On the other hand, just imagine that banks could behave not only as banks in a traditional way to provide APIs, but they can behave as TPPs. So they can as well as consume. So they can connect other banks' APIs and then combine all that API services and data together with their own, and they can make something up to that for their customers. Third case is just imagine that you can not only provide your own regulated APIs, meaning PSD2 APIs, but you can look forward for some extended cases. You can treat open banking as the traditional product, if I may say, from the point of view you are thinking as well as about monetization, about business cases, about client satisfaction, and do that things as well as not only that you have to do, but for some reasonable things. And you can get either NPS or you can get from that some money. And if you combine all that things together, on one side, you can act as TPP and you can consume. On second side, you can provide something up to that in extension. This is something what I'm calling disruptive. And this is what we are trying to do in KB. So on one side, act as TPP, combine things from other banks, from non-banking providers, from fintech startups together in some reasonable space for a client. And on second side, we are trying to find out some other new cases which are reasonable for our clients. And my personal opinion is that this is something what is changing all times.
Thanks, Martin. And Julia, I'll give you the first shot at this. Being in Zurich, where you're surrounded by so many traditional banks, from years and years of traditional banking. How do you think will they disappear if they don't adapt?
No, I don't think that banks will disappear. I think kind of the banking license itself will still be something that has some sort of value and will still be regulated. I don't think that everyone will become a regulated bank themselves or wants to, because I don't think it's actually fun for everyone to be a regulated bank. So there might be many players that really on purpose opt to not do that and to work with the bank on to have those regulated parts and the reserves and all of that. But I mean, I think what will become less will be the front end. I think banks will lose some of the front end, especially in retail banking. But there will still be many other parts that you can play to power the financial system in general. Yeah.
Thank you, Julia. I think the one thing that we're probably forgetting is to talk about the consumer, right? So when we talk about banks disappearing, it's really about the consumer. It's how the banks reach out to the consumers and make it so that the consumer will still want to interact with the bank. And it's so now where fintechs, big techs, the famous big fintechs like the Apples and the Googles and whatnot, the GAFAs of this world, whether they will take over that interaction with the consumer and the interaction from a customer base to a bank will disappear. And I think that's more of that issue of whether they adapt to be attractive to the consumer or whether they will disappear because they will lose that consumer facing capability.
Yeah, and UX and customer engagement is not a strong point of many banks. So I think that banks can learn a lot from more big techs and other startups. And I think that's more of a kind of realizing each other's strength and using them together to do something better for the customer. And I think it's happening, but it's still a bit to go in the mindset of the big banks. And just some of the really big ones here in Switzerland are definitely not yet there.
Thank you, Julia. Carmela, I'm going to go ahead and move on to you now with the next question. For Europe as well as for Latin America, why is it challenging for banks to break from traditional old bank mentality to this new customer-centric model, since we were just mentioning customers?
Well, I would say that, I mean, at BBVA, precisely because we operate globally, we know that there are not two places where financial operations work exactly the same. So we have a global vision, but we have an in-depth understanding of how the local markets work, in which we have been operating for years. And we think our experience is an unbeatable asset in advising companies with commercial interests around the world. No? Beside that, I think one of the main challenges is the investment both in technology, which is one, and the other one that we tend to put in the second place, but is the hardest to change, which is the internal processes, the internal control, so that we can guarantee that third parties can access their customers' data provided by APIs, but with the needed security and privacy of the customer's data. And all this combined brings into the development arena pieces and processes that were not there before. And I think this is the challenge. This is the mindset change that we need to keep in mind. No? In the same way, the banks need to appify all their services as those little bridges that allow two applications to connect and exchange information. And this is a very different way to approach the traditional services that a bank gives from their own channels to their own customers, where security is controlled by your own systems, etc. Last but not least, we have the cloud, which is a window into gaining speed and access to new digital ecosystems. But in some cases, you face with the regulation that you need to take into account, which can be, for example, the case of Turkey. So, I mean, we also need to bear in mind that banking is a highly regulated industry, and any change needs to follow a strong compliance program, which again is a challenge to innovation. No? But it also sits at the core of the reliability inherent to banks. No? So I think that all these combined, the cloud, the application, the internal processes, the regulation, all these bring challenges into the open banking world.
Thank you, Carmela. And I'm going to go ahead and just jump back to Paul and wrap up with this last question for Paul. Open banking has the consumer at the center of the initiative. Do you think that banks understand the threat of big or small techs that are delivering consumer-centric products based on banking and not on the use of actual banks?
So it's a really good question, Carlos. And I think that when you look at it, they do see the threat, obviously. And as I said before, you know, we worked with, for example, Societe Generale in building a common platform for a single mobile app for multiple countries across Africa. But I don't believe that we've really fully understood the complete shift in the API world. So for example, we've worked with a lot of telcos in creating mobile wallets, and we've seen some of those telcos in Southeast Asia actually apply and get licenses to become banks, because they are actually doing more banking than the banks, because in some countries the number of unbanked is very high, and everyone has a mobile phone. I think the real revolution here is that, you know, APIs are the products of the 21st century. And, you know, you would have thought that banking, which is fundamentally a kind of virtual business, would have understood that virtual products are the future. But actually, I think that there's still some learning to be had. And one of the key lessons I think that people haven't yet got their head around is that, you know, there was a big innovation in the 20th century around an integrated supply chain for products. So that's what changed products in the 20th century. And if APIs are the products of the 21st century, we need an integrated supply chain for APIs. So that means being able to manage your APIs and the logistics, the supply, everything right from the back end, from your legacy systems, through your partners, through your ecosystems, through federation of APIs, and to create a highly integrated network. And I see only a few companies really grabbing that. And I'm afraid I think the banks haven't quite got there yet. Some of them are getting there, but it's not happened yet.
Thank you, Paul, very much for that. Unfortunately, we've run out of time. I think we've had even you know, additional questions, and I'm sure there were a lot more comments to make, but we have run out of time. So I wanted to, I know we're going to be going into some Q&A later on, but I wanted to thank my panel, first of all of you, for just a great insight. I think we could be talking for hours on this subject, but really wanted to thank everyone for your participation and for your great insight on this panel.